I'm not a big fan of investing in dividend stocks in general, but I do own them from time to time, especially when I have some cash. I want to park it on the side, collect a nice yield, and get some price appreciation. I buy the dividend stocks, and I'm seeing one that's really attractive at this price. I used to own the stock, and I might potentially buy it again, so I want to talk about it with you. But what's really interesting about the REITs and dividend stocks in general is the Fed could potentially be lowering interest rates in 2026, which is going to make the yield of the REITs and dividend stocks very attractive on a relative basis to the Fed's funds rate. So you're not only getting the yield, but you're also getting the potential of an amazing multiple expansion in 2026. And the stock is VC Properties. It's down 9.5% over the last 6 months, but over the last year, it's been performing terribly, down almost 12%. If you're not familiar with VC Properties, they own one of the most iconic properties on the Las Vegas Strip, such as Caesars Palace, such as Park MGM and MGM Grand, New York, Luxor, Excalibur, Mandalay Bay, and many others. And those are iconic properties, very, very valuable. They're not going anywhere. You can't rebuild them. You can't just redo them again. And this is really an amazing, amazing company. But the best part about investing in VC is you're getting very long-term leases with a lot of the tenants. For example, with Caesars, they have 18 properties with Caesars, and the weighted average lease term is almost 30 years. 30 years is insane. With MGM Resorts, they have 13 properties, and the weighted average lease term is almost 50 years. So you can't really get any safer than that with a company's 30, 40, 50-year weighted average lease terms. Or Realty Income doesn't have that. Triple Net doesn't have that. And a lot of those companies, they have 8-year leases, 10, 11-year. You don't have 40, 50, even 55-year leases. But the total weighted average lease term is about 40 years for VC properties. So you really can't get it anywhere else. And it's pretty amazing. About 42% of them are indexed to the CPI. So if inflation is 3%, they're going to raise rents by 3%. If it's 10%, they're going to raise it by 10%. And they're transitioning more and more to a CPI-based rent increases over time. And by 2035, over 90% of their properties are going to be indexed to the CPI, which is going to be amazing. Now, the main reason why VC properties is going down, there's many reasons, but one reason why it has been going down recently is due to lower tourism traffic in Las Vegas in general. If you look at this chart, the tourism in Las Vegas, it's down to levels we haven't seen since the 2008 financial crisis. This is really, really bad. It's due to many different reasons. One reason, I believe, is a lot of the sentiment from a lot of the international tourism due to the tariff war and a lot of the policies and some different things that are affecting tourism. There's a lot of numbers that are proving that, and it's affecting Las Vegas in general. But I think the biggest risk for Las Vegas in the short term and the long term, as a lot of people agree on, is online gambling. So why would you go to Las Vegas, pay all the resort fees and all the fancy fees and sales taxes? They have so many fancy fees in Las Vegas, and a lot of people agree it's getting a little bit pricey, a little bit expensive, and you feel like they're ripping you off. So why would you go to Las Vegas, spend all these fees, if you can gamble on your phone at home, at the comfort of your house? Why would you even go to Las Vegas? You could just do it at your house. You don't have to pay all these fees, and you could do it anytime you want. So a lot of people believe this is killing Las Vegas in the short term, and in the long term, Las Vegas is going to be dead because you could just gamble on your phone. So why would you go to Las Vegas? I personally disagree, and I have a different view on Las Vegas and the subject in general. I think Las Vegas, and the commissioners there, they're not really dumb. They're kind of realizing that, and they're diversifying in many different avenues. For example, there's a lot of sports events that are happening in Las Vegas. There's the Formula One that's going to be there through 2027, and this is expected to bring back a lot of the lost traffic and tourism once it comes back. I believe in early 2026 it's the event. I don't really remember, but there's many different sporting events that are happening in Las Vegas. A lot of different entertainment, and a lot of singers are singing, and people want to stay there. They want to watch those events. They want to watch the Formula One or watch a lot of the sporting event. They are likely stay at a hotel room VC has 60,000 hotel rooms. They likely want to eat something. The company has like 500 plus food and breakfast outlet. Maybe they want to buy something. They have 500 retail outlets. Maybe they want a certain meeting to attend a conference. The company has 6.7 million square feet of meeting and convention and conference space. And they have entertainment centers. So the company has it all. And if you're not going there to gamble, if you like to gamble on your phone, maybe you're going there for something else, and you'll likely have to use something that is owned by VC. And VC doesn't really take the loss of the day-to-day operation. VC is just collecting the rent, which is why I would much rather bet on the real estate than bet on MGM stock or Caesars stock, which I believe is cheap, and I used to own the stock. But I think betting on the real estate is much, much better. But the company, again, is recognizing that, and they're diversifying away from just gambling in general, and they're acquiring things like bowling kind of places, and things like water park and sports kind of events, and hotels in different places, and they're just diversifying regional casinos. They're diversifying in general from just Las Vegas alone and from gambling alone. And one of the recent acquisition is Lucky Strike, was 433 million, and this is about 38 bowling entertainment centers, which in my opinion is a very smart acquisition. Now, yes, you could play bowling game on your phone, but people still like to socialize. They like to go play bowling and socialize and eat something and spend some time and drink something. You can't really do all those things on your phone. So the company is diversifying, and over the long term, they're going to have less of a percentage of revenue from gambling and Las Vegas, as they're going to be more diversified. But they still own those iconic properties on the Las Vegas Strip. They can't be rebuilt, and I don't believe they're going to go anywhere no matter what happens in Las Vegas. But VC Property is an amazing REIT. They grew their dividend about 6.6% CAGR. I personally don't believe that the future dividend growth is going to be the same as the previous years, because their AFFO per share growth, or adjusted from some operation, growth is slowing down. It's about 4, 3, or 2%. So I don't see how they're going to keep up to 6.6% growth. I think the dividend growth will likely slow down to 3 to 4% over the long term, and it will likely match realty income's growth, which is about 3%. And this is the average for a REIT. It's 3%, 4%. Some of them are 5%, but I don't believe they're going to be able to keep up the 6.6 dividend growth for very long. But if you're buying VC Property, you're getting a record high dividend of about 6.3%. 6.3%, guys, is really not bad at all, considering that the company has an average lease term of 40 years. Those tenants are not going anywhere. About 75% of their rent comes from 2 tenants, but they're Caesars and MGM. I don't see MGM going bankrupt, and I'm not seeing Caesars going bankrupt, and I'm seeing the Venetian, which is 10% of their revenue, amazing, iconic property. I'm not seeing that going anywhere either. So again, I believe the dividend, guys, is pretty safe, and 6.3% with such long-term leases, in my opinion, it's a pretty good deal, and you're not just getting the dividend, you're getting the AFFO per share growth, or adjusted from some operation. We don't use earnings, we don't use PE with REITs, we use AFFO per share. So the AFFO per share has grown 6%, 11%, 2023, 2024 was 5%, this year is almost 5%, and next year is expected to be 3.5%. So I would expect an average of 4 to 5% AFFO per share growth. So if you take in the 5% on average and the 6.5% dividend, this is almost an 11.5%, close to a 12% annual return on a company like VC, which I believe is very, very safe in my opinion. 12% for just putting some cash in the stock and holding it. The properties are not going anywhere. Las Vegas is going to still be here. But the best part about it is you're also getting a potential multiple expansion, because now the company is trading at a discount. It's trading about 12 times price to FFO per share. The average is about 14.5. I think we can get back to 14, or almost around 13.5, if the tourism in Las Vegas picks up again, and if the Fed cuts interest rates to maybe 2% or 2.5% in 2026, we might go even further, maybe 14, 15, almost maybe it used to trade as high as 17 or 18 times. back when interest rates were a little bit different and there were more excitement about the company. But I see the potential for a multiple expansion. But without the multiple expansion, I'm seeing at least an 11 to 12% annual return for just parking some cash in VC properties. So to me, the stock is looking very, very attractive, very interesting. I don't believe it's gonna make anyone rich. It's not some 10x stock or a 100x stock, but I believe it's a great risk to reward bet at such prices if you're looking for something safe and a good dividend yield and a decent compounder that's a amazing quality with a wide moat and trophy properties and a good real estate investment in general. So that's just my opinion on VC properties. It was not financial advice, so I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.